We want to welcome everybody to today's call with Paul Sullivan, CPA and President of Sullivan & Company in Bethesda, Maryland. Since 1980, Sullivan & Company has worked to deliver solutions to help businesses and individual clients become more successful professionally and financially. They offer a broad range of services for business owners, executives, and independent professionals. In our call today is a little bit different format. A while back, Paul sat down with his staff and recorded an audio presentation titled 3 Strategies to Attack and Approach Your Small Business Bookkeeping and Accounting Situation, and I think we'll expand a little bit on that. But I think first we're going to talk a little bit about some tax updates and things that are timely right now here in the fourth quarter of 2012, just to keep you up to date. And then Paul may talk a little bit about, along with Raj Goenka, one of the senior staff accountants, and Bill Isaacs, who's a CPA and also the tax department manager. So with that, I'll go ahead and introduce Paul. Paul, welcome to the call.
How you doing? We're going to talk about the tax, just a few notes on tax updates as we approach the elections and what will happen in the beginning of 2013 should things remain the same. So covering this, I'm going to introduce Raj Goenka. Raj?
Hi.
Welcome to the call, Raj.
Thank you. I'd like to introduce some of the tax changes which might be implemented beginning 2013. As we all know, most of the Bush law tax changes are about to expire in 2012. And if they expire and Congress does not implement any changes or updates, the maximum income tax rates, which are 35% at the moment for 2012, they might go up to 40%. Anyone who is enjoying capital gain taxes of 15% might not be able to do so in 2013 when they go back up to 20%. Capital dividend rates, qualified dividend rates, might go up to 40%. And we are also talking about increased Medicare surtax on investment income of people who make above a certain range of income. And also Medicare payroll taxes might go up to 2.35% from where they are now at 1.45% for people who make above a certain amount every year. Many of the estate tax exemption, which is approximately $5 million at the moment, will fall down to $1 million at the maximum, and the tax rates for estates, which are 35% at the maximum at the moment, will go up to 55%. That means the IRS wants all your money. There have been many changes about foreign income and accounts, assets reporting. IRS is getting tougher and tougher every day now. We believe you are already reporting all your foreign income, but if you are not reporting your foreign assets, such as bank accounts, securities accounts that you might have in a foreign country, you should start reporting them now. The IRS wants a detail of what you have in other foreign countries if you are a U.S. resident or a citizen. If you are a U.S. citizen or a resident, you are by law required to report all your worldwide income when you do your income tax returns. But now with the tax law changes, you also have to report if you have any foreign bank accounts in a foreign country, or if you have assets such as securities, properties, investments in a foreign country, and if you meet the thresholds, you might have to report them to the IRS. There are no taxes imposed on the reporting, but the penalties may be much higher. So I believe these are some of the tax changes which might affect many of us middle-class Americans who are filing their taxes now. And I would suggest if you have been working with the CPA in your past or are considering working with a CPA, this is a very good time to consult them on how to take the maximum benefits of these changing laws, because we still have a couple of months left in 2012. with that, I would like to put Paul on with if he has any different tax law changes that he can make us aware of.
No, Raj, you covered it pretty good. I think most likely one of the items is the capital gains will increase to 20% in 2013. And for qualified dividend income, it'll raise to 40%. So the people might want to meet with their accountants or meet with their investment people and restructure their portfolios.
Paul, a quick question on that capital gains. I've heard that there's a concept called gain harvesting, where you take a profit in anticipation of a change of the capital gain. Is that something that is applicable in this situation potentially?
Yeah, harvesting is where you have stocks in your portfolio that have a gain, and ordinarily, if you did not sell it, if you sold it, you'd pay the capital gains tax. But what you do is you sell some losses that are used up against the gain, and thereby there's no tax in the current year. And it's a common item that's done at the end of the year to use losses and balance them against gains. Yeah, earlier this year, I think it was this year, we did a seminar on three different strategies on handling your accounting, and strategy number one was to hire a full-time or part-time bookkeeper. Strategy number two was outsource to the CPA firm, and number three was to do your own accounting in-house. I'm constantly meeting with people trying to figure out which method is best, because no matter which method you keep, ultimately it comes down to the people involved. So I saw a business yesterday, and he uses the method of, he's a small business. He has maybe 5 employees, revenue of $800,000, and his method is he puts an ad on Craigslist for a bookkeeper. He hires the bookkeeper. He kind of supervises the bookkeeper. He happens to be in the business of software engineer, so he's kind of used to the computer, but he has to supervise the bookkeeper in order to try to get the accounting done in-house, and then at the end of the year he uses the accounting firm. And he complains about how he hires the bookkeeper and he trains them, but then after 6 months to a year, they leave. So he's back to hiring another one. In our experience, this method is, it's what people see, and there are exceptions to this. Our experience is it works about 1 or 2 out of 10, where you might get a part-time or full-time bookkeeper that actually stays with you. In any business, there's unique things. They're not all the same. So they need to learn the intricacies of the business, and then by the time they learn it, they leave, so he's off with a new one. I tried to convince him that he could either try outsourcing the accounting firm, or there's actually a new concept out there which is called insourcing. Insourcing is where a business owner, in general, many of these, if you take an example business of a construction business, you have one person that runs the business and one owner, and he might have an administrative person in-house, and other than that, he's got everybody out in the field on the projects. The method that's used is it's through the computer. What the people do is they fax any invoices, in the case of accounts payable, they fax it or email it to an address, and those bills come up on screen, so that those bills go to, for example, North Dakota, and they come up on his screen and he can see the bills. And then he merely, when he wants to pay it, he clicks. And then that bill paying service pays it, puts it in an envelope, pays the bills, or in many cases, after a while, pays it electronically. We happen to use this type of service in our CPA firm. Then the outside accounting firm can merely look up everything that's been paid online, and if they code it correctly, all of this data can be downloaded into QuickBooks. So in this way, he's merely authorizing the payment, and all of the administrative tasks are done by the bill paying service, and the accounting firm has access to the data online, and everything is available online, so the information is available, and it streamlines the bill paying effort, and it in general costs pennies. The cost for the bill paying service is, in round numbers, somebody would say $1 a check, and if you were doing it yourself, you'd pay 45 cents in postage. So if they pay it electronically, it's actually less than $1 a check. But this is a method that's not mentioned in our three methods, but it's becoming more and more available, where people take their accounting department, in some cases, where they have one or two people, and say they're paying those people $100,000 a year, and they can use this insourcing method and, in many cases, reduce their $100,000 accounting department to half of that, and get everything and get the same items done. So we've done this with clients, and we've actually made it better for them, because they used to mail checks international, and now the people would have to wait, depending on what country they're in. They would wait 3-4 weeks, and in many countries they have difficulty cashing checks. So now we pay it electronically, so it's instant, and the client authorizes those payments on screen and has access to the payments, can see what we paid, and all that information is available. So this is what we've done recently, and I think it's a method that many businesses should consider. Right, we had another case just recently that I talked to, and they will probably hire us. So maybe 6 months ago, they hired a full-time bookkeeper for roughly $3,500 a month. So this business is in the business of title searches. They have 5 employees, another small business, and they pay $3,500. And the problem is the owner doesn't know what the person doing the QuickBooks is doing, because when they hired that bookkeeper, they didn't even talk to their outside accountants, nor did their outside accountants offer for them to help in the hiring. So you have an owner that's a specialist in title searches hiring a person that's supposed to know QuickBooks, and he complained that they've been in the office for 2 or 3 months, and they seem to be creating, quote unquote, they seem to be creating work, number one. Number two, we're still behind by 6 months on the accounting. And number three, I don't know what she's doing. And so you can see the problem with, a person in another industry hiring a QuickBooks person and just letting them loose on the software. It just doesn't work. But one of the things we offered in our package of services is we would overlook what she's doing, assuming he wants to keep that person, which I told him in general, keep her, see how she's doing. But what we do is we install software on their computer in their office in downtown Washington, and we log on, and we can do everything from our office that we could do if we were there, and then we will monitor what she's done. So if she says she's done bank reconciliations for March and April and May, we will actually see those bank reconciliations, and it's all done very efficiently.
So in this case, you provide oversight, but you're also helping the owner possibly verify that work said that is done is actually done and done correctly.
Yeah, that's correct. And then also, as part of that, because we're connected with them, when he, as he said in his previous accountants, he would say, we just use the accountants for our taxes. And that basically that means is, it basically means this. I was there on October 12th, and October 11th, he received his tax returns, personal and business, personal, and I take it back. It was because he was an LLC, he reported it all on his personal return. So he was receiving his personal returns for 2011 on October 12th, 2012, and you don't really have any. What he's missing there is he's missing any real-time information or advice from an accountant on his business, which is really what he needs. And the reason why he doesn't get it is he's kind of been trained by default that he just sees the accountant at the end of the year, and he tries to get it done the best he can, and he doesn't really have any accounting firm that's kind of working with him. They're kind of working after everything's been done. They just do the administrative duties of preparing the taxes, which is, you're not getting your money's worth.
And Paul, is it fair to say in this example that a lot of companies like that, they don't understand the value that you would bring in terms of consulting with them, to help make sure that the company is profitable, and that there's certain experiences that you have that if they ask you and partner with you, and you become sort of part of their team, that you can help them run the business more effectively, because you have a close scrutiny on the numbers.
That's true. A lot of this comes about because in the case I saw, the previous accounting firm is charging them on an hourly basis, so they tend not to want to call them. They don't want to involve them because every time they involve them, they get a bill or they know, whereas the way we work is we give them a package, and we have a budget for the year, and in general they can call us all they want, and there's not any change. So in that way, they feel like they can be our partner because every time they call us, they're not going to get a bill, and that encourages that kind of activity when you have that. And it's not much more than what they pay now. In fact, our budget proposal for the person I just talked to, actually we're probably about 75% of what he paid the other accounting firm, and we're offering to be available as needed with not any. It doesn't cost them more to do that.
That makes sense, especially financially.
Yeah, it's a good situation.
Paul, if I'm a business owner listening and maybe have considered changing accountants sometime during this year, what's their business advantage doing something here in the fourth quarter as opposed to, say, waiting until the first of the year or after tax season?
I mean, generally speaking, now, October, November, December, we get increased calls for people. In fact, yesterday I got 2 calls for individuals who want to come in to preliminary look at their taxes. They're both new to the area. They're not going to use the accounting firm they had before. They want to know what they can do before the end of the year. In the case of businesses, sometimes the results of operations could lag a little. Besides that, now that we're in the fourth quarter, you have more data. When you're in the first quarter, especially when businesses are seasonal, they don't know exactly where they stand. But here at this company, we do tax planning in the fall because you have a full 9 months, 10 months of operations. So the majority of the year is gone. You want to know where you stand. The accounting's got to be up to date. When you have that data and you just have 2 months left, now you can predict where you're going to be. Whereas in the first quarter, you might not know for the year you're going to have a profit or loss or where you are. But now that 9 or 10 months are gone, we can assess where they are. They can put in a pension plan. They can. One of the things they can do that really helps them actually is that if they have profits, they don't want us to tell them in April they have a tax. We can see you can do items 1, 2, 3 in planning, and then after that we can tell them the balance due. Now they know about it. They can plan some things. They cannot get into a situation where they've spent the money on other things, and then the tax comes and they're not prepared. So that's what we try to do now, and then come January, February, March of next year, you're more concentrating on 2013. You're doing a budget for the year. You're getting set for 2013. You're not in a situation where you're in October the following year and you're just finished the previous year. You're in a situation of, you're planning for 2013 because you know what happened in 2012, and that's what we try to get people to do.
Paul, if there's somebody listening to this, either on the replay or some other means, and they've been on the fence, about making a change but suddenly after listening to this, they have an interest in talking to you. What's the best next step to take in way to get a hold of you?
I mean, the best next step is to think about their situation. There's nothing to lose by getting a second opinion, and that's what we offer when we see people is a second opinion. Sometimes I see people, they're in a good situation, they don't need to make a change, they're getting proper, and we tell them so. In general, we work with people on a long-term basis, so we don't take people away from good situations. What we try to do is tell them, look, this is where you stand, these are the items that you should be getting, and if they're not, then we give them a proposal, and they can consider making the change. We receive calls all the time because we're pretty prominent on Google, and we meet with them. There's not a cost for the consultation, and we compare what they should be getting with their existing situation, and they would email or call me. We're going to send a memo to our clients regarding identity theft. We had two situations this year where we just looked at them and just thought they were amazing, that what was done. And Raj handled one of those situations, and Bill handled the other situation. So what I'm going to ask them to do is just to find, the basic scheme is trying to receive a refund from another person's taxes. So one situation we had, I'm going to ask Raj, what happened, and if you could explain the details on how the person was trying to obtain money from IRS.
Thanks, Paul. The situation that I had was when we did their 2010 tax return, and they were carrying a balance forward to their 2011 taxes for the refund that they were supposed to get in 2010. All of a sudden, the client received two checks from the IRS. One of them was exactly the same amount for the tax carry forward that he had in 2010, and then another one was just an amount which he was not sure about. So his 2011 tax carry forward was approximately $16,000, and then he received another check of around $4,000, which he did not know what to do about. So he contacted us, so we looked into it, we talked to the IRS, and so we come to know that his taxes were filed for 2011 with certain amounts which were not his. So, and on the tax return, the 2010 carry forward was not claimed. So that's why the IRS sent him both the checks, one for his 2010 refund and for 2011, whatever was on the return. The returns were not filed by him. They were filed by someone else. So this is how identity theft comes into play. Someone who has access to your Social Security number, your name, knows something about it, they just put some amount on the tax return and put some withholdings or tax credits, and they will put the address thinking the IRS will send the refund check to the address they put on the tax return, which they do not know how the IRS works. The IRS will send the refund check to the address that they have on records until and unless you change it with them. There are certain forms you need to file to change those addresses with the IRS. So when identity theft happens, there are certain procedures you must follow so that it does not happen in the future. So we advise people should keep their Social Security numbers, keep personal information as safe as they can, because these situations are on the rise. If we look at last year when we had none, and now this year we had two situations as such, which we might think it may increase in the coming days. So I'd like to put Bill on the stand, and he would tell us about the other situation that we had.
Yeah, this case is actually brand new in that it came up yesterday. And how it came up was we e-filed this person's individual tax return. And after a day or two, we got a rejection notice back. stating that a return has already been filed, or this Social Security number for the primary taxpayer has already been used on a return for this year, used on someone else's return. So I called the IRS to find out what was going on. Did they really have a return, so we could get this fixed? And they told me that yes, a return was received under this taxpayer's name and Social Security number, with wages of a kind of a low amount, below $40,000, yet income tax withholdings of above $10,000, and there was an expected refund on this return. IRS though caught this. They flagged it. They thought it looked odd, and so they were holding on to it, and they hadn't done anything with it yet. They were still looking into it. There were a couple things that the IRS caught that caught their attention. Number one, again, the difference between the wage income that's being reported and the withholding seemed kind of high. The withholding seemed kind of high to the amount of wages that were being reported, and with some of the other deductions that this taxpayer was claiming. Secondly, there was a tax overpayment from 2010 that was being applied to 2011, and that was not even put onto the 2011 return. So the IRS thought that was kind of odd. So what that is going to make us do now is we're going to have to file paper returns for this client, and then there's another form that now needs to be completed and sent to a different office so that they can look into this and straighten this out.
To summarize those situations, basically somebody is making another tax return for when they get somebody's name and Social Security number, and they just make it, and then they make the income low, and then whatever refund the IRS would be sent out, they're hoping that it's sent to the address on the return. So, for example, the first client Raj talked about, the client lived in Silver Spring, but the new address on the new tax return was in Capitol Heights. So they're hoping it goes to the Capitol Heights address, and then what they do is they take the check to one of these check cashing places, not a bank, and they try to cash that U.S. Treasury check. And it just amazes me how easy this seems.
IRS has many cases of these. They know they probably get I can't remember the number. They say probably in the millions of tax returns that they think they get that are not correct or identity theft. They really just don't have the resources to kind of track all these and make sure that these are correct or not right at this point in time. But they realize that this is a big problem with the IRS at the moment as far as identity theft and incorrect returns like this.
So from your standpoint, if you were to communicate to clients, is there anything in particular that you would say, such as if you get an extra check, don't know what it is, or other situation that they should contact you?
Oh, yeah, and I think that's what happened with the case with Raj. Is in fact, the client got a check, the one check that he didn't think he was supposed to be getting, and he was like, well, what is this for? And that kind of alerted us that, okay, something's going on here. And when we called the IRS, they said, well, he filed a 2011 return, and we knew that was false because we were working on it at the time. So, yeah, if they get a check, or they could just get something from the IRS that has nothing to do with maybe their situation, a notice or something like that for some reason, that they know that they had nothing to do with. All that could possibly be for someone doing something with identity theft. And even if you did receive that check and you think it's a blessing, even if you weren't supposed to get it, at some point in time the IRS realizes that they will come back to you. And will possibly charge penalties and interest. So it's good to get it cleared up immediately instead of just thinking, oh, I got this, great. It should be dealt with immediately.
Wonderful. Thanks, Bill.
Regarding the accounting and bookkeeping, that the people should evaluate the methods we've talked about, and it does make a difference on how you're doing it. And with technology, some of the things that used to be done in-house can be outsourced with more control and more results.